I never want to go into a trade feeling confident. I always want to go into a trade with enough uncertainty that I'm not willing to stay with it if it goes bad. There's never a sure thing. Buy it at a discount. Algorithmic and robotic trading systems, missed pivots and divergences after earnings. There's no telling what's going to happen. If it's going well, I'll just hold on to that thing and just let that thing ride.
Welcome everyone to TradeStation and another edition of our Trader Interview Series. My name is Michael Burke. I'm Vice President of Client Trading here at TradeStation, and today we're privileged to welcome Rob Booker. Rob is an author, FX trader, and educator. Rob is a respected and sought-after speaker at trading events all over the world, and Rob has his own great podcast called The Traders Podcast. Rob, thanks so much for joining us today.
It's great to be here, Michael. Thanks.
So Rob, tell us a little bit about your background, how you got involved in the markets and trading.
Well, Michael, so my story is a little bit embarrassing, at least for me, but I don't mind sharing it. It's probably not that uncommon. But I started trading in the year 2000 after a friend of mine and I, who had been running a business together, it was an online business, and we ran that business into the ground. So we just trashed that business. We did not do a great job. And we had been making I don't know what the revenues were. It was like $70,000 a month, but we were spending like $80,000 a month. And I'm not that great at math, but that was not a sustainable business. And that business just completely failed, and we shut that business down. And my business partner moved to South America, actually. And I was sitting on top of a pile of business-related debt. And I thought, well, this is a great idea. When I was in law school in San Francisco, I used to hang out with these hedge fund guys all the time. I'll just trade my way out of this terrible financial situation, which of course is like the absolute worst idea in the world, because trading, of course, trading involves a huge substantial risk of loss. Stupendous gains by trading are uncommon. It's just the worst possible thing. So I had a friend of mine, Matt Zagula, who was a financial advisor and who's now a really well-known financial advisor, actually. He lent me $2,500. So I put my first account together, and I made this big plan that I was going to trade my way out of this financial mess by trading this $2,500 account.
So Rob, $2,500 is not a lot of money to start trading with. So maybe you can talk a little bit about how that went, and maybe talk about a really big winning trade that affected you and maybe a big losing trade that affected you.
Yeah, sure. Okay, so I've got this $2,500 account, and these are still kind of the early days of the internet, and I jump on fxstreet.com, and I'm reading through these posts that people are making. And there's this one guy on FX Street who says he works inside of a bank, and I think he said he worked inside of a bank in Germany or Switzerland, and I think you can probably already see where this is going. And he's announcing to the general public on this website when a big trade's going to come through on the euro or on the Swiss franc or whatever. And I feel silly even recounting the story because it sounds so stupid. But so he's announcing these trades, and he's saying, oh yeah, everybody should go long the Swiss franc because there's a big trade coming in on the Swiss franc. And so I'd follow this guy right into a trade. And like 3 days later, after taking like 7 or 8 or 10 of these trades and following along with this guy, I've got a 10% gain in my $2,500 account, which on a percentage basis is ridiculous. It's fantastic. But on a numerical basis, like a dollar amount, like $250 really that's not enough to do anything. I can't pay my mortgage or pay my rent at the time or whatever else. So that wasn't enough for me. And I'm thinking to myself, well, hey, Rob, this guy's really accurate. He must really know what he's doing. He must really actually work at this bank. And of course, there were no disclaimers on anything that he ever said. There were no warnings. And back then, the currency markets were just the Wild West. And so, of course, I think, well, this guy's the real deal. The next trade I take, I'm going to like triple or quadruple the size of my trade. So the next time he posts something, and I'll never forget it, it was a trade on the Japanese yen, and he's like, a big trade's coming in, and we're all going to go long the dollar yen. And so I go in really big on the dollar yen, And it's been like I've had this trading account for like 72 hours. I'm up 10%. And like 7 hours later, I've lost everything except the margin I put up for the trade in the first place. And I was sitting there left with my head in my hands with $250. So I'd lost like 90 something percent of the account. And I guess ironically, I was left with basically the gain that I'd had over those last 3 or 4 days that I didn't really appreciate. And that was percentage-wise, that was the biggest loss I ever took. And it was a huge lesson to me that, well, there's a whole lot of lessons in that. But the big one was, never bet your entire account on any kind of anything, ever. Like for any reason whatsoever. There's never a sure thing.
Well, clearly, Rob, you've learned from that experience and turned it into this incredible trading business. So, Rob, you started out as an FX trader, but now you're trading other markets. Can you talk a little bit about your trading approach these days?
So I probably, 9 out of 10 trades, 8 out of 10 trades that I take are going to be in the currency market. But I really like trading stocks after earnings, actually. And so that's a big part of what I do as well. Is I watch for somewhat lower priced stocks between $10 and $20 with a reasonably sized market cap and enough volume that I'm not trading some low float or thinly traded stock. I'll trade those after earnings, and that is progressively becoming a larger and larger part of what I do. Mostly because I just enjoy it. Like it's something that I've got a little technique, or I got a little method for doing that. And, I'd say over the next 10 years, that's probably going to go more, it's going to be a more even split between FX and stock trading.
So you're trading after earnings. Is this an options type of strategy, or you've developed a number of trading techniques over the years? What is the idea behind trading after earnings?
So this is my little trick, and of course it doesn't work all the time, and all the standard disclaimers that don't ever do anything that I do, don't ever listen to anything I say, and this is all really dangerous and whatever else. But with that sort of said in front of everything else, what I do is I'll scan for a list of stocks that I like, and my favorite way to scan for that list is simply I jump over to magicformulainvesting.com. That's Joel Greenblatt's website. He wrote a book called The Little Book That Beats the Market like 100 years ago. Not really 100 years ago, but anyway, he wrote this book, and he's got a scanner set up, and it's a free scanner for companies that have a really good return on investment or return on capital or whatever his formula is. And I grab a list of stocks with a market cap over 50 million and a bunch of volume. And I grab that list of 50 stocks and I plug those into my dashboard and TradeStation, my scanner or whatever, my list of stocks that I look at. And I wait for those companies to report earnings. So what I've done is gathered a little bit of fundamentals with the help of somebody who's got more experience than I do. I look at those companies individually, and 50 is a number that I can easily scan through and read a little bit about those companies and see if there's, for a while, for example, Pitney Bowes was on that list. And I think Pitney Bowes is a garbage company. I don't think it deserves to be on that list. So I just threw it off the list. But I was left with 40, 45 stocks that I thought, all right, these have pretty good fundamentals. They have a good business model. They're making money. And so what I do is I wait for those, this sounds crazy, but I just wait for earnings to come out when euphoria is super high and everybody's kind of just, running around their head cut off. And sometimes those companies will report lower than expected earnings, or deep inside the earnings report will be some kind of we're looking at our forward guidance isn't really that spectacular. So then traders will go out and they will overreact after earnings, and they'll drive the price of that stock down. And I look for drops. I'm looking at companies they have a lot of volume, so they're going to have a lot of shares out there, so it's going to be reasonably easy for me to trade. But I'm looking for stocks that are priced between maybe 7 up to maybe 20. Sometimes I'll go over that. I'll jump all the way up to stocks that are trading at $50 or $60 a share, and I'll wait for those stocks to drop 2, 3, 4, 5% after earnings, and I'll wait for those stocks to become bullish divergent. And I built an indicator, actually for the TradeStation platform was the first platform it was ever built for, and the indicator is incidentally totally free. But anyway, I built an indicator for the platform that looks for a special kind of divergence that I watch for, and I wait for those stocks to go bullish divergent on a 60-minute chart. And what I've done is I've I'm looking to buy a company for which I think the fundamentals are good. I think the market has overreacted and sold that stock off. So I think I'm jumping in or dipping my toe in the water at a time when I can buy it at a discount, get it on sale. And I'll take a small first position. I might risk 1% of my total available trading capital. Maybe at a maximum, I'll risk 5% of my total available trading capital. And I'll go ahead and buy that. I'll stop out pretty quickly if it drops below the lows. And I'll generally hold on to that trade for between 2 weeks and sometimes a whole year. If it's going well, I'll just hold on to that thing and just let that thing ride. And I'll just sort of build a portfolio of stocks that had pretty good fundamentals, at least according to my analysis, and bought them on a dip.
So I really like this approach. It's something I talk about a lot in some of my education, is that I look for a story before I make a trade. And a story is made up of a number of different chapters. And in your case, one of the chapters is the fundamentals, another chapter is the earnings, another chapter is the bullish divergence. I love that kind of approach.
Yeah, that's cool. That's a cool way to say it, like build a story. That's kind of, I guess that's exactly what I'm trying to do is I don't like the word confirmation as much because I think that suggests that there's some amount of surety or certainty to a trade. And I never really feel like that. I think every single time I take a trade, I kind of have this feeling like, what am I doing? Like, this can't possibly, I never want to go into a trade feeling confident. I always want to go into a trade with enough uncertainty that I'm not willing to stay with it if it goes bad. I want to be skeptical. I do better when I'm skeptical. But I like building I like building a story around it and saying, all right, well, the story, this looks like this story is leading to a conclusion, a happy, positive conclusion. I like that idea a lot. That makes a lot of sense. And yeah, that's exactly what I'm doing.
So Rob, with all of my guests, I do a little bit of research on the internet and kind of look at websites and some of the different things that my guests are doing. And in your case, you have a number of different websites and a number of resources on the web. So maybe you can talk a little bit about how all those work together and what you do every day.
Well, sure. No problem. I appreciate that. So I usually come in the office. I don't know how much detail anybody cares about, but I like details. So I come into the office some days I'll come in at 6, some days I'll come in as late as 8. And the first thing that I do is I'll scan for trades that I take in the currency market. And then I'll scan for trades that I'm going to take in the stock market, looking for those stocks after earnings to take a dip and then do something about it. So I'll do that first thing in the morning, and I'll jump in the chat room. I've got a chat room with our members around the world. We have about 2,700 members, and there's people all over the world. And some have been taking trades overnight, and some people are just waking up just like I am. So I'll jump in the chat room, and then around 7 o'clock in the morning, I'll record a podcast twice a week. So I do the Traders podcast, and we'll record that show a couple of times a week. And then after that, from like 8 o'clock until about 1 o'clock, I pretty much do whatever. I mean, we have a bunch of cameras set up here in the office, and so I do a daily show, a live show on Facebook, and I'll jump in front of the whiteboard, and I'll share some lesson from the 17 years of making really stupid mistakes. I'll share some lesson from whatever I've done, and then that video will just go up on Facebook, and then maybe we'll do we'll put that up on YouTube as well. But then there's a bunch of people commenting on that while the show is happening, and I'll get into a conversation with a bunch of those people. And earlier today, we were on the show, and I said, I really love the book Good to Great by Jim Collins, which is a business book. It's not even a book about trading. And someone said, oh, I'd love a copy of that book. So we got a box out. We keep these boxes next to my desk, and we filled the box with Reese's Pieces, and then we threw the book inside of it, and I'm going to go down to the post office later on and ship it to somebody that was watching the show. So between like 6 o'clock in the morning and like 8 or 8:30 in the morning, it's all business and trading. And then from like 8:30 in the morning until about 1 o'clock, there's no telling what's going to happen. It could be anything, a live video or me going, picking up my kids and taking them out of school early and, going to the movies.
That sounds great. So do you have any special events or projects that you're working on right now?
Yeah, I mean, I'm always, I build a lot of algorithmic and robotic trading systems. So actually, did a webinar for TradeStation a few weeks ago. We talked about missed pivots, and today we talked about divergences after earnings. So I'm building trading strategy for TradeStation that will do some of that automatically. I do some of that already in the currency market, but I wanted to do some of the trading that I do in the stock market automatically and algorithmically. So that's the big project we're working on now, is a robot that will trade exactly that strategy in the stock market automatically, and then it will just alert me to the fact that that trade exists. And that just makes it easier for me not to miss a trade, which I've found over the years that one of the big mistakes that I'll make is just sort of taking a day off and not watching it. And it's always on that day that I don't watch it that I miss it. So yeah, so that's the big project right now.
Well, that sounds like a great project. So how can TradeStation customers kind of tap into some of the free tools that you talked about?
So on the homepage of my website at robbooker.com, I have a link at the top of the page, or usually do, and it will be there by the time you and I, this episode goes up. I'll have a link at the top of the page for an indicator download. And that indicator download will include that divergence indicator that we talked about earlier for TradeStation. And you can download it. And if you're familiar with an analysis technique inside of TradeStation, you'll download the indicator. You can upload that ELD file or whatever right into your TradeStation. And everybody listening, that indicator is freely available. I've shared it with, I don't know, it's a lot of people at this point. So yeah, I'd be happy to share that with everybody. That's the easiest way to sort of look at the same kind of stuff that I'm looking at.
Well, Rob, it looks like we're just about out of time. I want to thank you for spending this time with us. This was really great.
I really appreciate being here. Thanks so much, Michael.
So I want to thank everybody for listening. Be sure to tune in and subscribe to more of our TradeStation podcasts. You can learn more about Rob Booker at robbooker.com. And don't forget to visit our own website at tradestation.com to learn more about our outstanding educational resources and online brokerage services. The preceding podcast was for educational purposes only. All of the symbols and trading ideas discussed by the instructors and guests were for educational purposes and not recommendations. Active trading is not suitable for everyone. Options trading carries a high degree of risk. You can find the characteristic and risks of standardized options disclosure and additional disclosures on the TradeStation website.